Yo, good morning, everybody. Hope y'all are doing well. But yeah, we got a reasonable amount of things to talk about today. It's looking pretty interesting. So let me get some of this ready. How's your guys' week been? Let me know in the chat. Curious to hear about what you guys have done this week. It's still only Tuesday, obviously. Sorry, I'm like sick, so I got to mute at times to cough. That's why there will be some silences. But yeah. Let's get all this set up. Okay, move to the 1 hour. So we're definitely looking to retrace a bit. So we got this wick. This SMT is kind of irrelevant. Definitely got dollar sweeping the liquidity that we talked about. The whole bullish move that we called pretty much just went right to script. So now that it took external range, it's potentially seeking internal range now. Again, if it's going to be overall bullish for the dollar, eventually we'll see this turn around. We have this bearish order block here on the S&P. We got this wick right here. That's going to be interesting. We do got this inversion for a value gap here on the Dow, right? The inversion there. Possibly have an inversion here. We've got the new week opening gap, drop below, swept stops. Now we've somewhat changed state of delivery. We were really bearish. We talked about how, price may look to kind of retrace a little bit. We got liquidity that's been purged. Big ranges lead to small ranges. And external range was pretty much taken. So it's not unreasonable for them to want to do something like this. But what the key is, what are they potentially reaching for? Right? Like, what would be the purpose? And honestly, we have the high here. We did have this wick that was pretty solid. It may still get respected, right? We have up to the 50%. And if it breaches past 50%, we're going to be able to, potentially target up here. But we don't want to see it blow past this. We'd like to see it, if it does get up there for the Nasdaq, we'd like to see it run up into it, maybe shoot a wick, but on a body closure basis, we're going to want to see the candles proving that it respects this level and this consequent encroachment. Again, there is an order block here, so we got an order block fair value gap combination. And again, our full line in the sand that would turn us completely off of bearishness and would kick us back in line with going higher. First of all, we need to see dollar decline. And if we don't see that, and it just keeps going higher, again, that's any of these retracements going higher is just to price in a short-term premium before it looks to take off. I do notice that there is an SMT here, actually. So this right here is definitely something that instigates the likelihood of them giving this retracement. You have SMT plus change in state. So again, depending on how this is respected or violated, it's going to determine whether we're going to run deeper, or say there's just a wick that shoots up, but the body's closed continuously below the 50% of this wick here. That would be, pretty encouraging that it's going to continue to give us another leg lower. Again, it is a NFP week. We do have to be cautious. 1 to 2 trades, half risk. There's no reason to go too hard. So yeah. Let me make sure I got all my charts up. Okay. All right. Make sure I got DXY. Currencies. Mind you, there's no news until I believe 7 a.m. Yeah. So it's going to be a reasonable news event. Remember, 7 a.m. 3 a.m. in the morning, 7 a.m. and 11 a.m. Pacific Standard Time. Those are all 4-hour candles. And as you guys know, with every single candle, every time frame, Power 3 is unfolding. I have found that the 4-hour chart and the 4-hour candles are super, super beneficial in terms of identifying bias and narrative. I mean, it's unheard of, right? Most people don't use it, but a lot of people do. But if you didn't realize how impactful the 4-hour chart can be, I'm going to go ahead for the next couple of months, or next couple of weeks, I should say, and try to really drive home the point and how to use the 4-hour chart to kind of help you with narrative, kind of help you with what to expect with the silver bullet. Because every 4-hour candle, if you notice, right, there's one at 7 a.m. What is 7 a.m.? Well, that's the silver bullet window. What about 11 a.m. for the PM session silver bullet, right? 11 a.m. is when the next 4-hour candle forms. And again, it's a silver bullet window. So there's a direct correlation between the silver bullet model and the 4-hour candle's delivery. Okay? That's something that most people don't recognize. But now you guys can recognize it. So there are 3 indices. Okay. So let me make this a little bigger. Oh, that's why the markups aren't there. I was trading the E-mini yesterday for Asia. I don't ever trade Asia, obviously. But, sometimes you want to be a little unorthodox, right? And if you can, there's nothing wrong with that. But yeah, so again, my whole objective is to see if we can get price to come up here. I do see that this is a failure swing here. I really like that. But again, the only way that I'm going to be able to really gauge if that's going to be targeted or not. Wait, why does it look different? Oh, does it? No. But yeah, we got to watch this wick here, right? We have potentially a change in state of delivery here. Take these down candles in here. So we got to see what happens with this. If price breaks down, say we get below this new week opening gap, that'll give us a clear ride to the sell side. And if this high does not get taken out with this movement and it breaks down and it gets below this low or even beyond the new week opening gap here, inverting this fair value gap, disrespecting these down movements to the 50%, maybe it reclaims this fair value gap. If that stuff happens, then we got a free ride lower. And if this high to that low leaves a failure swing before it breaks down, that becomes a mitigation block balance price range. So if it breaks down through it, price will trade back up into this lower candle, probably just stay below this wick and up to the 50% level and below. That's what I would be watching for price to hold at. Okay. Let me actually clean some of this up from yesterday. Just gonna plot this first presented. This is yesterday's first presented fair value gap. So if price can get up into this, we could definitely watch how it's going to respond. We are kind of range bound. We do have equal lows down below. I am still overall narrative-wise bearish. The bias, though, for the moment is just reaching for an internal liquidity pool or a rebalancing or retrading to an imbalance. Of course, that right there, let me see. Yeah, we got some levels in here that could be important. This 8-hour fair value gap. It does have this like gap in here too from the new week opening gap. Oh, that's the close of last week. So yes, it's the new week opening gap. I guess we could kind of pull it all the way down because it basically is a volume imbalance, like a gap, right? So we got to encapsulate all of it. Got the 50%, right? If you look at this left chart and you look where it's populated on the right, you see the 50% of this gap that I just outlined. It's right there. We have accumulation, right? So we're trying to gauge what the manipulation is going to be. If price does choose to run up a little bit, maybe it wants to contest this wick a little further. It could do that. And depending on the response that takes place after it does that, obviously we'll make a determination. But this right here is that. So that's part of this high. We got SMT. Oh yeah, so we got SMT at both the lows and the highs. So the highs, right up here, and we got it at the lows too. You can see it right here. We got dollar declining. So with dollar declining, as aggressive as it has in this instance, we took liquidity up here that we've been aiming at. So external's been taken. Now we're seeking internal. So we're going to have to stay in the upper 25%. Once this comes all the way down between the midpoint from this this high up here, we can actually use that one now. But if it was to break down below 50% here, this may become something of interest. I don't believe that's what's going to happen. I did talk about how when price opens up this week, I'm very curious to see how they'll spend time below and then try to send us continuously to the buy side. So I'm still of that opinion. Got a suspension block here. Let's see, where is it at? There it is. So yeah, we're going into the first macro, aka the unreliable macro. Most of the time, right? Not all the time, but most of the time. See a stop run here, breakdown, displacement, respect to the fair value gap, attempted closure of this whole entire little gap up here that's available. Basically a new day opening gap for DXY. And now we got displacement. So this low's been taken. We do have trend line liquidity. I mean, there's a lot of liquidity in there. But again, we have to make sure that we're observant to whether the structure is going to continue to keep going higher. We got the breaker in here that's been held up. We got a wick here. Price took out that wick, but the closure of the bodies are above this wick and above this high. So that's not bearish order flow. It just simply looks like we're in a mode of retracement after we just purged this quarterly high up here. And we pretty much respected this gap in here too. The new day opening gap that we talked about before it happened, like when we were down here, we talked about how that may be something of interest. It's proven to be such a scenario. So yeah, and this is actually a quarterly fair value gap. You know, what we're trading inside of. You notice how every time it came up into it, it's created a pretty nasty decline. If you want to go to this quarterly chart, we could see how it is in fact a quarterly fair value gap. So we got to see what happens, right? If this quarterly chart was a daily chart, right, or a 5-minute chart, right? When price trades into something like this, what would you be thinking? Well, I'd like to anticipate potentially price to respond away from that, going lower. So if we do start to see that and say it breaks down below this low here on this weekly chart, or even below the midpoint of this wick, and it's like rapidly trading, that would be when we look to change our potential opinion. We got to look at this as a PD array that's very responsive. So you could see how when price traded up into this not too long ago, we see a strong rejection from that level because it is a significant higher time frame PD array. Okay, so it looks like it's still going to continue going higher for the most part. On this 3-month chart, we're going to have to see, if that's going to continue to be supported and basically violate this fair value gap and keep going higher, or if this results in this being broken here, then again, the sentiment will start to shift. Okay, so for now, bullish order flow on most of the time frames except this quarterly perspective. It looks like it's trying to reach for buy-side liquidity. This is also a higher time frame bearish breaker, right? It's basically low, high, lower, low. It's also a bearish order block. Hasn't quite got to the order block portion, which is right there. It's very close, right? Very close. But it's still a breaker. Right? The down candle, stop run, breakdown. And we got the quarterly fair value gap. So we got to pay attention to this because if this is going to continue going lower, right, this should act as a breaker. We used this last year too, right? This delivery. We actually called the buy side and the sell side and rode the whole market maker sell model that was presented at that time. Which you can go back to this time period, look at the live calls I did, and you can verify. Right, but yeah. So this response here, it's very aggressive under the context of this quarterly fair value gap. It's definitely something we got to be cautious about when we're looking to continue to buy. But for the most part, most time frames are providing evidence that, even from this weekly down to the lower time frames, we're still supporting bullish breakers, bullish order blocks, right? We do have the 50% of that to watch for the dollar. So as long as it stays above this, we should be able to continue to see some pretty solid displacement, right? It just seems like it's reaching to the suspension block, and kind of determined by this suspension block. Depending on what it does, it'll really decide whether it's trustworthy to keep going higher, or if they're just going to come down to the center of this range and stay in a consolidation. I'm going to go out on a limb and say that this response here, we should be able to continue to get us back to the buy side. Now, whether it's going to need the NFP to come out for it to do that or not, obviously it's something that is always going to be on our mind in a circumstance like this, given that it is NFP week. They don't have to make moves on Monday, Tuesday, Wednesday, Thursday, any days that are before that NFP time. Remember, the way that we view the news events, they're utilized in a way similar to the macros on the lower time frame, but just for the higher time frame. So, macros from that lower time frame perspective, the last 10 minutes, first 10 minutes of every hour, it's still impactful when you're looking at things from a higher time frame. But more so, the news events are more important because those act as macros on the higher time frame, right? And you can go back and do back testing on this, and you'll quickly see that there's validity to looking at the news like this. And it's super, super helpful because if you're looking for a move to be traded into, say, this suspension block, or say it was an order block or a fair value gap, if you're waiting for the news to give us that volatility injection to get us into that level, that is a very reliable way to kind of time when a move is going to take place. And then once it tags a level like this, and say it's ahead of a news event, going into a news event, once that news event hits and we're in that significant level that's already been traded to, we should be able to then see a response away from it, targeting the opposing liquidity. Again, I can obviously say this, and in theory, it seems pretty simple. Maybe a little too simple for some, but if you go back and look at this, you'll be shocked. When I discovered this, I was shocked. It's not only a timing tool for the lower time frame in terms of the news, it's also a higher time frame PD array initiation, right, or reason for price to either trade to a PD array to set up a continuation, or to time the continuation from like the initial retracement like this to then target the buy side, right, if you're bullish. Same thing is true when you're bearish. Okay. So yeah, just one of those, key things that has to be considered when you're trading with the news. Obviously, it's a lot of times best to wait for the news to come out. And when you're trading ahead of the news event or ahead of the open price specifically, a lot of times that continues to have manipulation characteristics or accumulation characteristics. So that's why you always got to be cautious. Preferably, we wait till the 6:30 comes, let the gamblers gamble, and then we find opportunities. And again, we're using the news in a way that I just described. That's why, a lot of times we're also able to get in front of the moves that take place, especially after a displacement, to either retrace a little bit like we anticipated and is manifesting in the chart. From that to also timing when price gets into those levels, when the move should start away from it, right? And all that comes from the news, right? And of course, thinking about internal to external, external to internal, right? Like this low is external liquidity. And once it tags that on the higher time frame, many times it looks to try to rebalance a little bit. And then once we get that rebalance, we can get that redistribution, redelivery as a result, going from internal to then further external range liquidity. Right, so these are dynamics that are truisms in the market. And this is part of the reason why I've told all of you guys, especially those in my private group, to go and study when higher time frame levels get met, right? When price sweeps out a higher time frame level, you want to observe on a rolling basis what the reaction generally is. Okay, you want to really pay close attention to this because, again, if a low is taken like that, that's external taken. So what generally comes as a result of external range being swept? Internal range delivery. And then, what can be used to time that, right? Like the expansion phase going into that PD array after a low or a high is taken. Well, you can use the news events. Line it up with when a news event is taking place, because then that can give you the volatility needed to get us into that internal liquidity. And then once it tags that, if you can catch another news event when price is inside of that rebalance situation after liquidity was taken, and you see it maybe change state of delivery again, right? Say there's one more little order block that forms, and then you see it violate it violently off the heels of a news event. Well, that's another way that you can gauge whether we're in line with the overall narrative again. Like, for example, this here, it took out the stops. What did it do? Immediately started chasing internal range. And what happened when it hit a logical internal range liquidity point? That being some of these gaps, that being this low, high, lower low, that's a breaker. So this took liquidity and then ran internally to a breaker. And then what happened? Once price broke down below this, you could see what took place, right? It was very reliably aiming to take out the sell side that we targeted and mapped out before the fact. We've called this entire run lower for the currency. So any of you that trade currencies, I don't focus there, but I do the analysis, and it's all the same. And generally, we're just as correct with this asset as we are with the indices. Quite frankly, every asset we touch, we're able to know what it's going to do fairly quickly in a reliable fashion. Don't take my word for it, right? Just go look at the replays or continue to join us, when we do these calls, especially the Sunday calls. Those are some of the most impactful things that we do here, at least on YouTube. And we're doing this every day in my private group, right? So yeah. So we're looking to trade into this. We've already taken liquidity. We do have to pay attention to the 1, 2, 3 drives that took place. Because if we start to get a rapid change in state where it just starts breaking through, say, this level, reclaims it, and then supports it and then displaces, that may upset this overall delivery to the downside, especially if dollar declines and that happens, which, it's kind of in a state of doing that at the moment. But again, we have this high. You guys see that? Yeah. We have this high here on the DXY down here to that low that broke the high again. So again, we need to make sure in this instance, this down movement that then broke this high should be classified as a BPR. We had a change in state right here, and you see that it's off to the races, right? Taking out the high. But the retracement, we would not require it to get down to the 50%. We don't want it to get down there. We want it to stay in the upper 25%. Couple that with a PD array, because this, retracement to go higher should act as a BPR. This lower to go higher movement can also be looked at as a market maker buy model. Same thing with this movement, lower, higher. Same thing with this, lower to higher, right? If you're expecting these highs to be taken, any retracement going lower that you're expecting to go higher should be thought of in a market maker buy model fashion. Anything that's going higher to go lower should be classified or looked at in the lens of a market maker sell model. And yes, it's that broad, right? It's not super overly complex, right? This is something that's justified by ICT saying a couple times over the years that we are always in some form of a market maker buy or sell model. And that statement's true when you go do back testing and think of it from this perspective. Anything that goes lower to go higher should be thought of from a lens of a buy model. And if you go in there with that intention to identify that phenomenon, you'll see fairly quickly that this is absolutely a fact. So that's why market maker models are my favorite, right? They're the pillar on the back end of what it is that I do, aside from some of the other, different variations in tactics from Power of 3, to, you know, many other things. But this here, if I could nail things down to, you know, one or two things, power of three, risk mitigation, the way that I talk about regressive risk, and market maker models. Those three things, I mean, they're just ridiculous. You know, once I mastered those three things, you know, things really changed. And I'm sure that it'll potentially have the same effect on you, because most of my students, I teach this stuff to, right? I try to nail down these things that most people watch a couple of videos, they think they got it, but they really don't got it. You know, everything can be expanded upon. So you want to spend time on these different topics. I actually made a list. I can't remember if I posted it in the free group. Let me see if I can pull it up real quick. Again, we don't have news until later, so I'm not really too concerned about missing anything. And we're before the open, so I really don't, quite frankly, give a crap. Okay. We'll let the gamblers gamble and win, get too excited, and then blow their accounts while we're putting them on the other side of our trade. Let's see, where is... Where the hell did it go? There it is. So yeah, if you guys don't know, I don't think I shared this with my free group, but here you go. These key topics, I'm having students in my community or anyone that learns from me. I want you guys to focus on this stuff. Any of you guys that do like what I do or see the validity, because you know it's proven every single day and every week. You know, if you see that there's value in what it is that we do, and you see that, you know, there is a roadmap given the things that we talk about, and you know, you see the effectiveness. I encourage you guys, if you haven't taken these things serious, right? Each of these topics, obviously, I discuss in one way or another. All of these things are used every single day for me and expanded upon ad nauseum in my private group. I do share, obviously, a lot of components here as well, not being left out. You know, so, you know, just to help calibrate some of you guys, you know, if you can say that you understand these things dramatically, everything fits inside of these topics. So if you master all these topics, you essentially have all you'll ever need for bias and narrative, risk, management of the trade, institutional order flow, where price is going to go for bias and narrative, structuring with Power 3 and market maker models basically helps you navigate price, daily, weekly profiles, daily, weekly, monthly ranges, right? Now, all this stuff really helps you with many things, from trade executions. Obviously, I don't have execution in here. That's kind of coupled with live trade management and validation. But if you can master all these things, which again, I talk about like a lot of these things. I have a video on market maker models. I use them every day. Power of 3, risk management. I talk about that all the time. You know, regressive risk, right? For those that don't know, if you take a loss, you drop your risk. If you take another loss, you're done for the day. If you take a win that hits a reasonable goal, you stop. You don't go in for more. You know, you have to burn this into your head. Because once you overtrade and over leverage, even if you haven't done it for months, you know, but you do it that one time because you're like, oh, you know, I probably entered too early, right? I'm over my 2-trade limit, but I'm just going to do it. I can do it. I'm the exception to the rule. You just, you know, newsflash, you're not going to be the exception. Okay. So this right here is one thing out of all of this, out of everything I teach, that really helps students survive. Okay. Risk management. No more than 1 to 2 trades a day. If you take a loss, do not go back in with full risk. Right? If you take a loss, drop your risk. Try to make at least half of it back. That's your only goal, not to cover all of it, not to, you know, double your account, not to, you know, be in profit. If it does occur like that, that's great. But at the same time, you don't want to focus on that. You want to focus on mitigation, keeping the equity curve beautiful, and keeping your drawdown minimal. And when you hit a streak of losses or drawdown, you have to aggressively push this approach on yourself. Because if you don't, that's why there's a lot of boom and bust cycles. This one tactic, 1 to 2 trades a day, and dropping your risk after you take a loss, setting these limits for yourself, this one thing will save you so much heartache. It'll save you so much headache, right? It'll save you so much drawdown. Doesn't mean you won't go into drawdown, but it's definitely stuff that can really, really, really help you. And, obviously you guys are going to do whatever you want to do. But hopefully you guys are inspired by some of the stuff that we do here and the accuracy and, some of the student testimonials and, just all the things that we show that prove validity to what it is that we do. It wouldn't be that way if the risk management process wasn't present. Maybe you could call bias and narrative. Maybe you can get correct on the overall direction and whatnot. But if you overtrade and over leverage, you're never going to be successful. You won't. If you must take 5, 10 trades in a day because you're just like, for whatever reason, needing to do that, you're not going to be successful. You just will not. And I don't care what anyone tells you. Okay. I don't care what Joe Schmo over here is doing. Maybe he's being successful. The 99% of people who overtrade and over leverage, even though they may be good at calling the narrative and finding opportunities, they will never win. They'll win and lose, or they'll get out of their trades early, right? Say they look for the 20 to 30 point target, but then every time they go into drawdown, they're moving their stop, right? Hoping that it turns back, trusting that it'll turn back. When in reality, sometimes you'll get it wrong. So to prevent the boom and bust cycle, this here is my number one weapon, okay? And if you make money at the end of the day, say you made 1%, whatever your target is, if you must go back in with another trade, especially if it's the end of the week and you're profitable, you need to lock in some of that profit. So if you made, say, $1,000 towards the end of the week, same thing's true for the end of the month as well. But if you're at the end of the week and you were already profitable and you say you made $1,000, well, if you must trade on Friday, you want to make sure you're locking in 75% of that. So the only risk allocation you have for the next trade on that Friday, given that you were already profitable for the week, you should only have like $300, right? If you want to lock in 70%, that's fine too, right? Or and only give yourself like $200 or $250 or even $300 to risk on that day, right? On the Friday that you're trading after you've been profitable. This is how you secure profit. Like, you got to lock it in. Don't let a profitable day or a profitable week turn into a negative week. Why do that? Especially if you worked hard, did everything right. It just takes that one time to blow your account. It takes that one time to mess up months of progress. Years of progress can vanish in 5 seconds because you refuse to apply this type of perspective, because ambition sometimes fogs the reality of what you should be doing, right? Don't let ambition become toxic. I talked about this the other day, right? Ambition can be a positive thing, but then again, ambition can also be a toxic, self-destructive thing. And as traders, we're all highly, highly ambitious. And it could be a double-edged sword if we don't know how to manage it and also manage the highs, have a process for what we do, and then also manage the lows. Like, if I win 4 straight days in a row, I'm either going to take a break or go in there with super low leverage. Let the week pass, sit with the profits, and then just have the risk small, right? Expecting that a loss is going to come. If you're on a big win streak, this is something that really, really helps me. I'm not sure if it'll help everyone else, but this is what I do. And honestly, it's shocking, the result, right? And the amount of money that I'm able to hold on to rather than give it back to the market. Because that's the problem. Everybody gives it back. Doesn't matter how much you make. What is your protocol, if you have one, to secure your money and not give it back every single time by pushing too hard? What is your protocol? What is your limit? Same thing with losses. How many losses is it going to take for you to drop your risk all the way to the lowest possible leverage until you build back the confidence? Do you have to blow all your profits to then think, okay, well, maybe I got to make adjustments, right? Or if you take, 2 or 3 losses, do you have a plan to just to drop your risk and realize that you may be in a streak of losses? Not that it's a bad thing, not that it's something to be fearful of or panic about, but we all face that. None of us are perfect. We all get, into a situation where there's losing streaks, and we all have winning streaks from time to time. How you manage those losing streaks and win streaks, and how you preserve capital in those moments of, high emotional stimuli from losses or from wins, it's going to be the separating factor. And again, things like this is a weapon that's more powerful than you can even imagine. And nobody has a plan for these things. You don't hear any educators except ICT talk about this stuff. Like they just don't talk about it because they're trying to make you addicted to the signals, or buy their course or do this and do that nonsense, and it doesn't sell talking about risk management, talking about how you got to be responsible, hold yourself accountable, plan for losses. Everyone tries to portray as if they're perfect, and who gets hurt by that? The people listening to them, So hopefully the things that I talk about here help you guys see the proper perspective. And, if you guys haven't heard this type of conversation before, I know those of you in my private group hear this all the time. I burn it into your head. You have no choice besides accepting it. But yeah, I hope this stuff is helpful to you. Okay. Again, there's no news until 7 a.m. We're not even at 6:30 yet. So if any of you guys are really antsy, like, oh, I'm missing a move, that is a problem. And you need to, learn how to just relax, wait till the best opportunity. Think about this. Are you skilled enough to trade a counter trend move? Like, do you even have a process for trading counter trend moves? I mean, I teach that here, so some of you might. But if you're trying to trade pre-market open, do you have the skill set? Is it at a place where you could trade counter trend and manage manipulation and price action and trade with the manipulation? Do you know how to identify the manipulation? If the answer is no, you have no business trading pre-market open. You just don't, right? So again, if you have a friction here, because of many times us, just waiting till 6:30 and then most times till after 6:30 to let that first 30 minutes unfold. If you have friction there, I mean, that's a big, bold red flag that you need to be paying close attention to. Because I guarantee you, most of your losses, if you do trade pre-market open, and you see that you were correct on the day a lot of times, guarantee they're in pre-market open. And if you just remove that pre-market open and that overzealous anxiety of thinking you're missing a move by waiting till after the 6:30 takes place, I'm sure that even that plus the risk mitigation and regressive risk approach that I just talked about, having a plan for wins and losses, like win streaks and losing streaks, this stuff right here in itself will help pretty much all of you move forward in a pretty dramatic way, especially if you're able to call bias and narrative and you kind of have a feel for, how to call where price is going to go. I mean, it's just some of that important stuff. You know what I mean? So again, if you have any friction thinking, oh, we're missing something, we're not missing anything. Okay. If you've been here long enough too, you guys know for a fact that we could trade PM session. We don't even got to trade AM session. I traded Asia yesterday. I made $15,000. So it's like Asia. I don't even trade Asia. Okay. So, it doesn't, eventually it won't matter when you trade, but you definitely, again, you got to have a plan for all this stuff, and you got to be understanding of the conditions, understanding of what each session does. Okay. And what role it plays in the daily range. Okay. This is vitally important. Most of the best trade setups that you find, they're going to be coming from after the 6:30 open, because that's when price is going to expand, right? It's when all the volume's in the market, all the anticipation for the New York Open, people are trying to build positions before the manipulation happens. And that's why when the open happens, it's so violent, because it knows people are overzealous. They're trying to enter too early. They don't have a real understanding of much of anything, really, right? And they're just like tossing trades in like a casino. We don't want to be part of that crowd. If you want to be different, separate yourself from the masses who, 95% of the time lose. You got to do what they're not doing. Be focused on what they're not focused on. And a lot of that, well, a part of that has to do with when you're deciding to take your trades. Because again, it's time, then price. Okay. And this is an algorithm that runs off time, right? It needs to be in the right time for it to expand. Okay. So, just keep that stuff in mind. But yeah, so again, just to do a quick overview, because we are getting close to the open, I do want to see if we can continue to hold in this currency chart, see if we could stay below the 50% here, see if it breaks really aggressively from this high to that low's 50% level. It's basically this up here. Basically, if it breaks beyond this daily bearish order block, we'll have to kind of consider adjustment to a buy model instead of the sell model that's unfolding. Low, high, breaking down to the lower low. Again, if this low is broken, it becomes a bearish breaker too. We technically have a breaker here and here. Low, high, lower low. Move to the 2-day chart. Low, high, lower low, right? If it breaks down below that. Notice again how we took sell side. What was the response? Because this is a previous month's low from November. What was the reaction? It swept it, closed above it a little bit, or a lot of it, right? It swept it and then came all the way back. Remember what I talked about this reaction? When price takes a significant level and it immediately comes and closes above it, that's not a highly bullish indication that, it's not a highly bearish indication here because it's bearish. When it does this, a lot of times that's going to be a green light sign that we are going to get some type of reasonable retracement. And then eventually, if it continues to get close to that and we revisit that area and nothing's changed overall in the narrative, then we would see it continue to go. Right? It's the same thing if it runs highs and does this same thing just to the opposite side. That's not a bullish indication. That's a green flag for price to want to give a retracement after it breaks a level. So that's a perfect sign that price is now going to target external, which it did here, to then try to seek internal. And you'd have to couple that with some PD arrays that are in alignment. So yeah, again, this wick here, this is also a bearish order block. We got to watch that, see how it's going to respect that. Preferably, if it is going to be bearish and we are going to drop, we did take out our main objective that we laid out. But if this is going to continue to go lower, it is Tuesday, right? Let me see. So yeah, again, this is the start of the week. So price is definitely retracing. We may set the high of the week off this type of delivery. This is what's to be expected on Mondays and Tuesdays, starting a new week, especially if it came off of an expansion. Because again, Sunday and Monday, that generally presents us with the accumulation manipulation phase in the weekly candle. So this whole manipulation is just to simply price in to a premium, target some premium array to give us the setup for the high of the week. And then once we get another change in state of delivery, we could then see price continue from whatever level it reaches into. In this instance, we got high, low, failure swing, and then a decline breaking through this low. So this high, low, failure swing to break this high. There's also SMT there. But once it broke down below this became an active mitigation block. And again, aside from that, we also have this daily fair value gap. So this is an inversion, so it should be able to continue to hold and continue to drop, right? We'll see, obviously, if that's going to unfold closer to the open. But if you're bearish, this is what you want to see going into a Tuesday. right? It's definitely something that we'd prefer to see. Now, is it going to try to go a little deeper? Well, maybe. We haven't quite started to give any type of impulse. If we go to the 4-hour chart, we do have a swing high here that could be violated. We do have an inversion fair value gap here that was presented after this stop run took place, and we've turned around pretty aggressive. So again, if you take this high to that low, if price gets beyond this fair value gap here, if it gets too close to the open of this up movement, which is again a daily bearish order block, if it just starts sliding through that, then again we have these equal highs up here that may get targeted. But again, we're under the assumption that order flow is still bearish, nothing's changed. Dollar, we're starting to see find its legs again. So if this continues and we stay above this level, preferably above the 25% from this high to that low, we should continue to see this just be a retracement to then go lower. That's my expectation. Can it use today because it's NFP week to just kind of stay in this range, continue to build liquidity down below? I mean, sure, right? We'll obviously get a lot more clarity after the 630 comes out. But because of what the structure looks like, I'm going to continuously push for this going lower. If, of course, it breaks through the 50%, like I just mentioned, from this high to that low, say it violates the order block in here, then that'll have proven that this SMT that we see is actually very significant. And then it can help us have a reliable adjustment in perspective to then target the buy side liquidity. But for now, I'm going to just continue to see this is positioning for a short position. As long as dollar keeps going higher like it is, that supports this being a fake move. It is before the 630 open. So again, this can all turn out to be just manipulation to pull people in. We may even take this high here because that's where early sellers are at, before it blew out the lows that we were targeting. Maybe it shoots a wick up there, takes that, and then starts to really, really amplify to the downside. We'll see, right? And then again, we have this daily fair value gap in here too. Why is... Let me double check. Yeah, we got that inversion over here, but we also have this. So I think we can keep that in mind too. So we have an order block bearish, we have a wick, we have fair value gap, we have a low, high, lower low, right? So there's lots of things in this level, plus the wick here. Let me see, which is this one right here. So we got those quadrant levels. It's ironic too, this wick has a fair value gap that is potentially going to form in here. Well, it did form on this daily chart. So that big wick quadrant level, or quadrants, right? There's two of them in line with this. It's coupled with the fair value gap. So that may be pretty sensitive, okay? So that's what I'm watching for the currencies. Hopefully that makes sense. Try to be as thorough as possible. And then, of course, with this, again, like we talked about earlier, we have this order block. Price seems to be respecting the down movement here, right? We're not really having a good time getting through the midpoint. This new week opening gap is acting as support. Take it to the 15-minute. We do have previous regular trading hours gap. So there's that. If any of you guys are wondering about this indicator, this is an indicator that's specific for my private group, for lifetime students, and it's given after 6 months for the month-to-month students. For those of you that are wondering what this is. We got many indicators coming. We got indicators for our models. One of my good friends and longtime student named Mark, he is an absolute savage, and he's gracious enough to help me with this and share it with you guys, all of you that are in the private group. So those types of things are things that you would like to get a hold of, or even if it's just like an idea of something that can be created, and how helpful it can be, right? You can consider that too. But again, these indicators, along with the other ones that we're going to continue to create, that are not decision-making indicators, they're more consolidating your thinking type of indicators. That's what all these indicators are that I have. It's just to plot things that ICT talks about that I think are important for my trading. So I don't have to think about them, you know? I think that's highly beneficial. See clean charts. So yeah, we do see that there's equal lows here. Let's go double check. There's also obviously SMT down here that's kind of triggered this reaction. I wouldn't be surprised if they do try to take this out here. You know, we'll see what happens. We do got this regular trading hours gap, like these quadrants like I just mentioned. So we got 25%. You see how sensitive that is from the previous day? We got 50%. All right, if it's going to keep going higher, we should respect this high to that low. The 50% of that should continue to hold as a balanced price range. This high to that low, as price is printing through that range, the deeper it goes, right, and the higher the likelihood is that it's going to target this high. It's leaving behind a balanced price range. It's just creating it as it's going higher. So if we had sell side that's inefficient, the buy side that's happening, right, the balanced price range is starting to look like this, right? As this up movement delivers, this is how I internalize price balancing a price range. I see it moving up, and then once it hits this high and retraces, all of that's already balanced. So it should not have to come deep into this. And then as it continues to go, it's continuously printing the balanced price range until it's fully balanced above the high. And then, of course, once it breaks down through the midpoint of that, say it sweeps the high and then breaks down, taking out the 50% of what was just left, that's going to start potentially offering it the other way if the narrative, like in this case, is still bearish. But as it's doing this, right, as it continues to support this level, or these levels here, and it continues to offer buy side, depending on what PD array it is that we're looking at, we can continue to reliably see things in this way visually. This is how I was able to internalize balanced price ranges. It's one way, one of the tactics that I used to make it make sense to me. Hopefully, it's helpful to you as well. And then, of course, inside the larger range or balanced price range, you also have mini ones too, little ones, right, that are creating little pockets of balanced price delivery. Buy side, sell side, buy side, sell side, and then buy side again. So ideally, if this structure is going to keep going to, say, these highs up here, maybe even this gap up here, because that's super available. Look at that. That may be something that gets targeted. You see this regular trading hours gap? Oh, I mean, it's inefficient up here because there's no buy side offered. It's only sell side. So from 400 to 520. So where's it? 400. From 400 here up to 520. It's ironic where that's at, right? From 400 to 520, that's inefficient to the buy side. It's efficient to the sell side relative to the regular trading hours idea. And all of this already has buy side and sell side, so that's not necessarily the main focus. What could be the main focus, because we're already basically there, is this upper portion here. And of course, when this opens up, say it comes and closes that in and then starts to rampage to the downside. Well, we're going to have, based on yesterday and where price is at, right? We're up here. We have all this discount that's available. So price is going to be opening up, if it was to open up, in the next 3 minutes, like it is. We're going to be opening up at a premium relative to yesterday's close. So depending on how it reacts to these levels up here, right, if it starts to really slam lower in line with the downside narrative, then we'll be able to use this as a reliable targeting idea, being the regular trading hours gap from the previous day, or from the current day and previous day, right? The gap up here that's inefficient to the buy side. You see there's one candle going lower. So there's no buy side above this high here. So this whole little gap in there, that's an imbalanced piece of price delivery. Imbalanced in what way? The buy side candles are not present. Sell side is, buy side's not. So to make that efficient, they have to lay over top a bullish type of price delivery. Again, we have this up here, so if it just smashes through that, then we may be looking to try to target some of this, right? That's up here, right? It does get us back to the order block, so it's not unreasonable. But once this high gets violated, right, that becomes a problem, like I said earlier. And on Sunday, that's where our validation idea is at. So taking this out or coming back to balance this out, that's not unreasonable and would still not fully change the overall delivery, in my opinion, from being bearish to bullish. It still wouldn't change that unless it gets above this new week opening gap, above this high, because again, there's a fair value gap in there too. On this time frame, on the 8 hour. So, I'm providing an allowance for it to come up into this level. I'd prefer it doesn't do that. I'd prefer it, stays below this wick and gives displacement. That would be ideal, because then that would tell us that we're heavy. Like we're still really interested in going lower. But I wouldn't put it past them or take it off the table, that we may look to try to run up and contest this a little bit. Because again, we do have this up here that may end up becoming significant. So yeah, so it's 6:30 now. So let's go see what price is doing here. So again, as long as it stays above this midpoint here, we could still continue to see it race a little bit. Again, we got the regular trading hours gap level. There is SMT down here, but there was also SMT at the highs, led to the declines, led to the rally. So it's very important to use what the DXY is telling us. Also to fully verify. It is somewhat in a mode of retracement. We do see that it's continuing to be interested in filling out the rest of the gap. Yesterday for that S&P had the same scenario, right? It's kind of got the same scenario in general, right? Sell side offered, buy side was inefficient. Look, you see that right there? I notice right where it's at. It opened up right where the inefficiency began, essentially. And now it's filling it in. Right? It makes it logical that these types of levels are going to be targeted based on how price likes to balance, or what's required to balance a price range. So I hope that logic makes sense. Vitally important, somewhat advanced, but hopefully I was able to articulate it in a easy enough way to understand. So yeah, unless this midpoint gets violated, it's still in a mode of retracement, trying to get up here. Who knows? Today may be a bullish candle to come and try to wipe some of this stuff out. Again, that's still within the realm of possibility without upsetting the downside delivery and sentiment. But again, once it takes this out, we're losing multiple PD arrays. In this case, from this time frame, the 8 hour, we'd have a fair value gap. We'd have, all this coming off a stop run. We'd have the wick here being disrespected, the high being disrespected, and then an order block here being disrespected. And then another fair value gap being disrespected once it gets up there. All we need is 3 to fully determine that, okay, well, there's a pretty solid likelihood that price is probably going to turn now. Otherwise, if that stuff stays intact from those higher time frames, there's really no reason to think that it's not going to continue, in this case, to go bearish. Same thing would be true if it was bullish. We'd just be looking at lower PD arrays. The closest 3. So yeah, if we can get this to reject here and have DXY continue its rampage, and we get the midpoint of this area getting violated, think about it. We just took out buy side here. So we're going to definitely want to keep tabs on that. Okay, let's see what price is going to want to do here. We do have an inversion on, what is that? 8-hour time frame, or wait, 4-hour time frame. We do have an inversion here that kicked in. So the current 4-hour candle, it's respecting this down movement, respected this inversion level here. Couldn't even get to it. Just tagged this little fair value gap, and it's continuing its race to the buy side. So again, nothing's, fully changed or taken away the fact that price is still looking to give this retracement. What could it be reaching for? Well, we got relative equal highs here. Okay, so we'll see what happens with this. Let's go double check this too. Okay, so the Dow, we have a pretty nasty cracking correlation here. Got our first presented fair value gap. So now we got a bullish breaker. So unless this breaker gets violated, again, we're still in line with price continuing to try to target these equal highs up here. It's very consolidated. It's not really super exciting. Again, because this is how the 630 has opened, we got to be cautious. It's better to wait for more information. Higher time frame wise, it could respect this wick and then go lower. That's one possibility that I could see. Or this breaker can then get us up and try to target the failure swing here, simply to get us to a fair value gap that's in a deeper premium that may then be used to continue the downside objective, right? So there's, two scenarios. I'm not sure which one at the moment is more likely, so I'm going to be waiting for more information. Of course, we got this first presented fair value gap here. So let's keep tabs on that. If it, on top of this breaker, say it rejects this and gets back beyond that, I think that would be used as a very, very solid support level to then ride it up, at least to these equal highs, get that one little jolt. Yeah, so it looks like we're getting below it. So let's just wait. All right, just wait and see. Again, something that stands out aggressively is these equal lows. These equal lows are in line with the higher time frame narrative. So if we do get displacement, that starts to take these levels out, this overall move here could be looked at as a market maker sell model. You could even wait till it gets down into this little accumulation here and then try to use that. The midpoint of this current regular trading hours gap is in confluence with these equal lows. That's something that we do like to see. Again, higher time frame's bearish, so if it shows us signs that a bearish idea is going to unfold, I'd rather take that than take a questionable potential buy opportunity. And again, because it's NFP week, we do not deviate from the fact that entries only can occur, at least for me, close to a macro, at least 5 minutes before. So you see how this is respecting this? Does that scream to you that we're going to go lower yet? That we're ready? Doesn't scream to me. We're still respecting this first presented fair value gap from what day? The 30th, so yesterday. We got another one here too. So these are significant, okay? So this is our current 4-hour candle. It's bullish power 3. So if you take the 3 a.m. time, oops, take that 3 a.m. time right there, drag that over. What has the power of 3 unfolded like? Right, what is it favored? It's favored, at least up to this point, accumulation, manipulation, set equal lows, distribution to the buy side, reaching into 50% of this wick. So this is going to be very, very important right? This midpoint, if price closes below, say this is where it stops and we displace through, using the higher time frame narrative being bearish and this wick in here, if we were to displace lower from that and it closes below that, is price respecting that wick on a body closure basis? I would say so, right? If that was what unfolded, something similar to that unfolded the other day, right? And last week, a couple times. And then once the silver bullet window came in, or the new 4-hour candle came in, because that was what we came off of, we were able to then get in line with the expansion of that 4-hour candle. So yeah, this is still holding in here, so it's very questionable. Very, very sketch. We do have the S&P still looking like it's favoring a run up there. S&P's taken out the high. Nasdaq has not. Well, Nasdaq's taken out the high. S&P has not. The Dow also has not. So the S&P and the Nasdaq are the strength holder versus the Dow. So if it does end up declining, the Dow may be a little more aggressive. Dollar's just off to the races to the downside. So yeah, we'll see if that wants to continue. Again, it seems like the breaker's holding up. Oh, whoops. Okay, let me see. High, low, took stops, higher high. See this this area too. So again, it really does look like it's pretty excited to target that. We got a huge wick in there on the daily. I wouldn't be surprised if we look to try to send at least a wick into that. Because again, if this was the 5-minute chart, wouldn't that make sense? Preferably, if it's super aggressive, we want to see the midpoint of this be respected. But it's not unlikely for them to want to take this out. Sell side's been delivered, stop's been taken, external. Now we're seeking internal. Where's our internal PD array? We got this order block, we have this fair value gap, and we got this wick. Okay, so price running up into this, it's not necessarily unheard of or unlikely. Now, if it proves to be unlikely by respecting this wick, you know what the vibe is. And then you can engage the silver bullet. Sorry about my voice today. Freaking sick. Ugh. So yeah, if we see what's happening here, I actually got this 8-hour bullish order block holding. So let's see, as long as this holds up like this, you know, we do have some reasonable objectives up here. It's clearly deferring any short positions. We're clearly at SMT. So yeah, there's really no reason for us at the moment to think that buys are not going to attempt to push a little further. You see the midpoint of that daily wick, beautiful respect. You know, again, the overall order flow in general is more so shorts. So if it can eventually give us the idea for a short, we're still sticking to that. All of this is pricing in a premium, short term. It's counter trend. Can you trade something like this? Of course you can. Yeah, you know, it just depends on what your objective is. You know, are you going to try to take buys, right? And try to just simply target this up here? We may not get that, right? It's super bearish. So it's much more high risk to trade counter trend in this environment when we could just simply just, you know, do what we're doing and wait to see if shorts supporting the higher time frame bearish narrative can kick in line. And we do got DXY kind of being a little bit difficult. So that, again, this weak dollar, even for a short term amount of time, it may be a catalyst that gets us up into these deeper levels up here. You know, this over here is London's lows. Basically, we've taken out London's highs. So yeah, this is pretty solid, nasty price delivery, but it is clearly holding for the continuation to potentially get up here. Why is it not working out? There it is. Your arrow is small to notice. Which arrow exactly? You talking about the mouse? The mouse arrow? Is that a problem all you guys are having? It's the first time I'm hearing that. Maybe I should increase it. Has that always been a problem for you guys? For anyone else? Yeah, you see how, you know, it hasn't turned on the sell, so it's continued to run. We're inside the macro now, ironically. Isn't it funny how 645 is when it expanded? Pretty interesting, huh? So yeah, it looks like we're racing through. Remember, we got the liquidity target up here potentially, if it wants to target that. And again, we got the rest of this gap. So it's really amplifying the overall perspective that this regular trading hours gap that was left unfilled, you know, from this high up here to the buy side, that's been the narrative for, or the overall bias for this morning. The catalyst as far as why it's moving higher. It's filling in this gap that we talked about earlier, which is unfilled. So once it fully fulfills that, we're going to see what it's going to want to do. You know, the buys are definitely unfolding at the moment. You know, like I said, no sells were on the table unless it was to break down. It's been all retracement. Yeah, can you guys let me know in the chat if the mouse size, I'm not sure if that's what he was referring to, the arrow for the mouse. If that's an issue, I will gladly make it bigger. I've never been told that. Wouldn't have known if it was a problem. But yeah, let me know in the chat for those of you who may have that issue or see that as an issue. So yeah, now we're hitting that first presented fair value gap. It's just a regular trading hours gap high. It's a little hard to follow sometimes. Okay. Yeah, I'm gonna see if I can make that bigger. How do I even do that? How do I do that? Mouse and pointer. Is that better? Yeah, do your best to hurry and let me know because we're like in the heat of the session. Is that a better size for you guys? I'm sorry about that. I would have switched it a long time ago. I never realized that was possibly a problem. That's good. You think I should leave it at that size? I can make it bigger too if you guys want. Yeah, what a huge run from the levels that we mapped out. That 8-hour bullish order block, right? Hopefully that fixes that problem. Yeah, that was a beautiful breaker. Beautiful 8-hour bullish order block delivery. We had retracement and then change in state here. All right, so if you trusted the price was going to continue to go higher, I was waiting more for whether this was going to react or not. It was kind of just stalled out a little bit and then obviously opened up aggressively, reaching for the target that we had laid out earlier. And again, I put an allowance for price to want to get up here to this fair value gap. And we'll see if we can get all the way up there. If it is going to get up there, I honestly don't think that this fair value gap is going to be traded too aggressively through. You know, that first presented fair value gap here should be able to act as an inversion. Yeah, it should be able to act as an inversion and get us up through that. Should be a shallow retracement here, if anything. And again, the only way that I'd be looking to short is if this low was to be violated. You know, I'd really need to see it do that. And then once that gets taken out, if it does, we have all this gap to target. We filled out yesterday's regular trading hours gap, so that's now fully efficient. So that would be something we have on the back end as well. And then we could target the trend line liquidity and these relative equal lows here. Okay. So yeah, I'm very light-handed right now. Wasn't aggressive. You didn't have the perspective of, you know, let's just really hammer this right now. Obviously, there was a missed opportunity in there, and we did lay out the levels that we're holding. Price never got down below. Oh, well, it created a first presented fair value gap here. And we've never gotten below it, really. It's just kind of respected this breaker. And now look at what it's doing here. Remember what I said about this fair value gap. We'll see how sensitive that's going to be to get us up and finish off the high. Maybe even get us up to 23,580. Look at how the bodies are closing right now, at least at this moment. It's beautiful. So that balanced out the price range that was left with that regular trading hours gap from previous day. And look what it's doing. Remember what I said? Should be a shallow run. If this is bullish, it's going to be a shallow run. depending on how much you trusted that, either was or wasn't an opportunity for you, right? It's very, very specific. It just depends on your skill set. But the bodies of the candles told the story right there. And we're rapidly looking to get into, it seems, this fair value gap here. So very, very rapid. So think about it. The next 4-hour candle that's going to form in 5 minutes, that candle is going to come off of this displacement. So we may get price to open up. Remember, power 3 is happening on every candle, including the 4-hour. That's a beautiful run. Supported all this stuff. I said that I wasn't going to be short until we broke down, so it was all bullish up to this point. Just kind of monitoring to see how the displacement was going to be. You notice how the first 30 minutes, what happened in that first 30 minutes? Just to highlight the rule that I have you guys consider. All right, well, the first 20 or so minutes going up to the macro, right, from 6:30 to the 6:45 macro, look at what it did. All the gamblers getting wrecked, right, blowing their accounts, and then all of a sudden it opens up and just explodes. Wouldn't you rather be part of this move? Right? Wouldn't you rather be part of this portion of things rather than this? It's like this all the time. That's why that first 30 minutes, a lot of times you want to just let it go. Let it do what it's going to do. And then come back and try to engage the power 3 for the next 4-hour candle. Or try to frame out the next 4-hour candle. Yeah, so you can imagine it's going to really need this to amplify to the downside. We now have, because this is a pretty large displacement, if price does give a strong response from up here, we have consolidation, accumulation, reaccumulation. If it reacts aggressively and we break down, we'll be able to frame out a sell model to then go short. Otherwise, nothing's telling us that until we start to break down. If until that happens, it's all upside until we reach a logical PD array. We've already disrespected this fair value or this wick here. We've already taken that out. It's kind of irrelevant at this point, right? So the next goal is the high here, which is previous day's high, right? That's what this is right here. So we'll see what happens. We got fair value gap in here. Stop run. Look at these candles. We're really, really close to that fair value gap. See, I'm very curious to see what it's going to want to do here. I can say that if we get back above this fair value gap, right, say it, respects this order block on a closing basis, or say it tags this low and then immediately runs through reclaiming this fair value gap here, inverting this one as well, we should be able to see this stair step its way, at least through this previous day's high. And that previous day's high obviously has the fair value gap there, or a little piece of the imbalance. We have a gap down here, right? So we could measure it all the way like that. But even if we do that, we already have buy side in here, sell side. The one piece of inefficiency in that fair value gap is here. Okay. So regardless, this level here is inefficient. So it looks like we're going to get that. Is there an opportunity in this for you? Obviously, it depends on you. I try to make it so you guys pair your model with the analysis that I share with you, and, you know, the bias that I point to, because it's your responsibility to find the moves. I just give you the logic that connects the dots. You know, a lot of times we're correct. You know, sometimes we get it wrong. But overall, the expectation, given that shorts never turned on really, never broke the level that I outlined, that would trigger my interest to go short and then target these levels down here. Because that stuff never got triggered in, we hung around for the first 20 minutes. Macro came in and we just immediately accelerated. This is evidence that macros are true. Any of these big YouTubers that are in the ICT community trying to sound different by saying that macros don't exist, how do you describe this then? Why does this happen every day, right? In some capacity. If they don't exist, I mean, what's the point in saying they don't exist? You know, it doesn't make sense to me why they even want to say that type of stuff. It just makes you not look at something that's super powerful. My dog's losing his freaking mind. There's an order block here. The midpoint of that should be respected. Inversion fair value gap. I'm gonna just couple all of that together. Look at that. Beautiful. What is it reaching for? Previous day's high. You know, like we mapped out over here. If you didn't catch anything in that, what I just mentioned in here, that was enough. And again, all you would be looking for is up there into this high here. Because it should be very reactive here. If we're still bearish, it should be reactive. Now, if it blows through this whole fair value gap, that makes our attention to this fair value, or this wick here, our attention gets really solidified in that, potentially acting as a BPR. And then, of course, breaking this turns into a change in state from this daily chart. So, and this will end up becoming a balanced price range, because large wicks followed by displacement, especially if you can couple them with like something like this that gets overlapped, you have this as a balanced price range and then this as well. So if it was to break through this area, I mean, that's a little bit ahead of the other levels that we talked about earlier from, I think it was an 8 hour. Yeah, up here. So that was our invalidation. Honestly, if this gets taken and we overtake this, you know, that may be enough as well, because we got the volume imbalance, got the wick, and then we got the gap in here. So we'll have to, you know, keep tabs on that. I'm curious to see what it's going to do once it takes this previous day's high. You know, because we're still bearish, I don't expect it to come all the way up here. You know, it should be a very solid reaction from this specific level in here. So yeah, let's see this right here. I mean, this would be a beautiful scenario if it reacts aggressively from this. Say dollar was to rally. Dollar's going lower, so it makes me more so still lean on the fact that we're still going to reach up into this. Now, if dollar rapidly turns around and we displace from this level, it's a higher time frame PD array, higher time frame liquidity pool. So we still got SMT at the highs. The Nasdaq is the weaker of the three. Shit. This new 4-hour candle just came out as well. So the open price is here. So now we're dropping lower. If it's going to go higher, we want to see this. We want to see a retracement a little bit before it ends up going higher, right? If this next 4-hour candle here, right, is going to be bullish, we want to see a respect to this. It's okay to return a little bit into that. It should respect this wick in here. Okay. So yeah, we're at the 25% there, almost. So let's see what happens with this. We got the order block, 50%. It's not really breaking it yet. If we take this low out, that becomes a possible bearish breaker coupled with a higher time frame PD array response. And again, that just puts us in position, because it's still bearish overall, puts us in position to then catch the short once it takes this low. Otherwise, if this holds and stays intact, you know, we're still going to continue to see price continue. We got a order block here, right? So if it gets above that and shoots a wick into that and cannot break through it, then that's just continuing to support that we're going to keep reaching to this buy side liquidity up here. Until we get actually inside of this previous day's high, which is also that upper portion of the gap on the daily. Again, I want to find a reason to go short. All of this is counter trend. Again, is there an idea that could have been engaged from this? Sure, right? Reaching up for simply the previous day's high. You know, respected. You know, we'll see in a couple minutes whether this gets respected or not. We do have a stop run, inversion, fair value gap, possible bearish breaker here. And the strong decline in the dollar is definitely something that's upsetting the timing for a short. It's a little bit less trustworthy to short when dollar's going to the downside as well. Yeah, let's see this reaction here. All right, we got, well, we'll have a change in state of delivery here. And if it forms another order block and then changes state again, you know, that would be enough for us to then trigger in the fact that this is turned on a market maker sell model. Again, we do have SMT at the highs, so that may be the reason why, if this does not decide to get beyond this, it may be the reason why, or the thing that we could trust to then see this go lower. But yeah, notice how the new 4-hour candle came in, and now we're below the open price of that 4-hour. 7 o'clock, aka the silver bullet, that is the start of the next 4-hour candle. We got 3 a.m., 7 a.m., 11 a.m., right? So from London to PM session, those are your three 4-hour candles. And power 3 is happening, of course, inside the daily overall range, but it's also happening when you break down that daily range on those 4-hour candles. So you can get in line with the higher time frame narrative and then also navigate some of the, you know, the 4-hour power 3s as well and operate within those dynamics. Adds further context. You see how we couldn't even get into this fair value gap? That's a very sensitive response there. Now we got an order block. Okay. So now we got a pretty solid change in state of delivery, back in line with the overall downside narrative. I just don't like how dollar is so aggressively bearish. It's a little uncomfortable seeing dollar do this with that crack and correlation. Damn, look at the Dow. It used that inversion. Dropped down, got back above it. The high of the regular trading hours gap. The Nasdaq has the full regular trading hours gap available. So yeah, this order block here is potentially going to be significant. We got to get back above this for me to look to buy. And I would just look for the previous day's high to be taken. But right now I'm looking at more so shorts. See if we can't get this breaker to continue. We got that first presented fair value gap here. Why are some of my markups not? Oh. So yeah, that right there is a bearish order block. See, I don't like that the dollar's going lower. It makes me not really trust this as much as I would if dollar was in line. Again, the narrative is still bearish. I favor that more so. So this is a circumstance where I would prefer to wait and see, okay, well, can we get down into the second stage here? And then I could look for something more reliable down there. Because we haven't necessarily fulfilled this up here. It's just rejected with no wick. How the hell did ICT do that thing with the candle where it pops up the data? I don't know how he did that. High is 23,580, 23,577. We talked about 23,580 earlier. Looks like it actually hit it. Yeah, 81. So it did kind of take out that liquidity. So we'll see. See what happens here. Again, we got that first presented fair value gap. Let's see. Yeah, again, I would really like to see this collapse. You know, big time run higher here. We're in a bearish trend. This all could have been manipulation to pull everybody in. Got this first presented fair value gap there. Bearish breaker. I just don't like that the dollar is so aggressive. And I can say that if we were to get beyond this inversion fair value gap here, if it trades through it, I would not doubt that that's going to be used as an inversion. Let's see. It's going to really determine if this was a true change in state or if it was just a purge coming down into this to take stops. Looks like it's being pretty aggressive here. So if this gets above this, that'll be looked at as an inversion, and then it would be able to get us up through to the high. If this is respected and we create an order block here, bearish, and we displace through it, any return back into that would be something I'd be interested in. Those of you in my private group, you can see some of the components in here and why that would be the case. You know, that order block that gets created, if it gets traded through, respecting this, after the stop run like this, if DXY can get some legs and go higher, this would end up becoming reliable down in here. And it's also coupled with a previous first presented fair value gap. Yeah, we just had news too. We didn't really get much of a response, huh? Didn't really get much. So yeah, it's kind of hanging around a little too much. You know, if this is a breaker, an order block, or, you know, whatever the case may be, we want instant, fast feedback. When it doesn't give us that, kind of hangs around. I mean, it a lot of times can become an issue and be less reliable. And again, if this gets up beyond this level here, then we should be able to see that invert. Otherwise, if this breaks down below this order block here, right? These consecutive up candles, that'll confirm the order flow with this change in state, and then we'll look to target these. Otherwise, this inverts, that changes the overall view, and it's going to get us back in line with the run above those previous day's highs. Yeah, dollar is really aggressive going to the downside. So yeah, that's definitely having an impact. So we're going to have to respect this if it's going to be reliable to go lower. Otherwise, this also, given the fact that we left the highs available, this may set up the run to get up here. Kind of iffy. You know what I mean? Kind of like, I don't like that they left the previous day's high, so it's much lower probability for the short. I would have liked if they tagged the high first. They tagged it a little bit, very shallow. So, and we're not getting any real feedback away from that order block. So yeah, watch this inversion for a value gap here. If it gets above that, that should set something up to then try to get us through, finish this off. So what we're going to do. So yeah, if we take this out, that'll confirm order flow. Oh, I like that. It's pretty nice. So yeah, once it breaks through this low here, if it displaces, that'd be enough for me to confirm that we're going to then try to transition. Did take out stops here. There is SMT at the highs. So we'll see. Yeah, it's got a real massive unwillingness to really want to get down there. Give a little life. Yeah, it's very much unwilling to do much to the downside. I think it's because they left those equal highs up there. It's definitely something. Because those equal highs are left, it kind of turns off my interest to want to take a short. I don't like to sell equal highs. But if we get up beyond this, I wouldn't mind taking a return into that and then try to get that inversion to get us up to the buy side. Stop run, inversion. So we'll see what unfolds here. Yeah. Should be able to see a very fast movement through. I don't even know if they'll give a wick into that. Probably not. It's probably going to be enough. And just accelerate. Yeah, previous day's high, that's the target. I'm not sure it's going to give a wick down into that. We'll see. Yeah, and there she goes. Yeah, it didn't offer me that wick. I would have engaged that. See why I was kind of skeptical? I was like, it's a little bit sketch. That's why I was going to wait for this to confirm order flow. Because of my rules, kept me out of a bad trade. So now we're going to watch this. Let's see how this is treated. This is a bearish breaker. Failed. So now that breaker area should invert. So let's see how that works. Yeah, correlation is just nasty. Everything's kind of doing very slow delivery here. Okay, now we're getting that return into that. Okay, so now it's trading really nasty. Let's see how this closes in this fair value gap. It's very unwilling. It's very reluctant. Very choppy. Very choppy. We started out pretty smooth. Now it's just nasty. It's not really reacting very reliably to anything, really. So yeah, it looks like that was all just a run beyond that buy side. Now it looks like, we may give it up. It attempted one more time to get up there, but now it looks like it's not going to want to get those highs. See, I'm not willing to really touch this at the moment. It's too indecisive. It's too back and forth. It's reluctant to take the highs. It's reluctant to break down through the lows. We're just back in the middle of the range, high to low. So yeah, this right here is why I don't short equal highs when they're available. It's too risky because it could easily come right back up into that. And I don't like to buy when there's equal lows, right? I like it to be swept. We kind of did sweep this, but the buys are very questionable in general because this is still a downside overall narrative. At any moment, they could flip the switch and they get right back in line with the narrative and go lower. And we got this huge regular trading hours gap. They may look to come back down into that. I'm not sure if they'll want to do it after they take the high or if they'll continue to be reluctant to take the high and then just still give it up. Looks like the Dow is falling. The Nasdaq and the S&P are having a hard time declining. Again, these equal lows here look beautiful. So, we'll see if we can even get down there at some point. So yeah, you see that? It's not like either direction. If you took a buy or a short, you're getting stopped out. Unless you had like an entry right here, right? Would have been reasonable. It's just a fair value gap entry, continuation equal to the equal highs. If you took a short, you're getting stopped out, right? It's putting massive pressure on you. Small stop losses are getting crushed the last couple of weeks because one candle can run hundreds of handles in 30 seconds. It's insane. So yeah, let's see what the response will be if we can get beyond this high. If we could tag that, at least we know that liquidity was really hit. And if we can get a response away from that, I think that'll be more reliable. trading up into that, it's obviously it's a little questionable. Look at how it's behaving. We do got the wick stop run, failure, change in state. So we do got my wick model for the buy side delivery. But again, what's the context? All right, what's the condition like? It's kind of unreliable. We may get that to open up though, finally, deeper into the silver bullet. Not in the macro, but it seems the move started in the macro. Beautiful respect to this level. Got back above it. So it's more so likely to get up beyond these highs. Once it did this, it's very reluctant to take these lows out. Yeah, see? So let's see what happens here. Again, there's nothing too exciting right now. It's just one of those days where it's just kind of lackluster, not really giving any follow through whatsoever. It's leaving areas available. Correlation is somewhat all over the place. Dollar's super weak. It has obviously correlated with this going higher, just instigating that retracement. But again, if you think of what's happening here on this lower time frame, coupled with what's happening on the higher time frame, it seems like this has all just been part of the down movement, right? It's part of the retracement within that down movement. And we're about to fulfill a level that if we're going to continue to drop, it's going to have to respond from, So I'd like to anticipate that response in the larger picture. Anything against that is counter trend. It's pretty high resistance. So yeah, we may get this to run up beyond the high here. That's what I'm paying attention to here. If we lose this low or this low, we may be able to then move ourselves into the market maker sell model. I prefer, if that's going to happen, I prefer them to jump above this and then give a huge immediate feedback from that high. This is the current 4-hour candle right up here. So we've gotten below the open price for that 4-hour. That silver bullet overall fair value gap is right there. The first presented, traded beyond it, and now it's using it as support. This, again, may set us up to get beyond the highs up here. So hopefully you guys haven't gotten chopped up in this. Jen said right click. Wait a minute. No. Yeah, no, it doesn't. It doesn't work like that. Yeah, no, it doesn't work. Hey, you see that right there, the silver bullet? Too small to follow. What exactly is too small to follow? Mind you, we don't really have, the arrow is still too small. This one, when I enlarged it. That's so interesting. Oh, I tried it. Down click, my work. Yeah, I'm not sure. Maybe it's the resolution on your screen. I'm not too sure. I've never had this issue. One of my students, DJ, confirmed that it's good. So I'm not sure. Maybe it's size of your screen. Maybe it's the resolution. This one, yeah, I did increase the size of the arrow. So I'm not too sure. I'm not trying to make it massive, like obnoxiously massive, because I've never had anyone complain about that. Seems like it has somewhat been an issue, but looking on the replay, I could see it fairly clearly. Yeah, like here, watch. You can actually pull it up to the screen right here. I could see it pretty clearly. I could personally see it right there. See, look, you could see it moving around all over the place. And this is looking at the replay in lower resolution. So I'm not too sure. I'm not too sure what the issue is. We might have just gotten used to it. Oh yeah. Let me see. Maybe I could adjust it one more time. I don't want to make it like too obnoxiously big. How about that? Is that enough? Why can't I show a circle around the mouse pointer trail? Make the mouse have movement easier to see. Okay, let me see. What about that? Is that too distracting? And I have like the trail so you can kind of see it. I don't know how I'm gonna fix this. I can make the trail a little smaller. So keep your eyes on this and see if we're gonna be able to get this to what's the color? Oh, let me see. Maybe I can. Maybe black is better. Is black better? I mean, it was a dark blue color. Nailed it? Okay, perfect. Perfect. Yeah, sorry about that. I never I thought the blue would be easier to see. But I guess we'll stick to black. A little bit bigger in the black color. I appreciate you bringing that up. No one's ever brought that up, right? I think DJ, you're right. Maybe you guys got used to it. Y'all could have just told me. I feel like, yo, your freaking mouse is hard to see. I get mixed with the chat color. Oh, okay. Yeah, I could see that. Well, again, this right here is the silver bullet fair value gap. So if we turn that right there, you notice how we're very reluctant building liquidity above these previous days high. The more that it fails to get up there, the more it makes me feel like they're just building liquidity. Again, we got this inversion fair value gap here too. Okay, so we got the silver bullet fair value gap inverted, significant. And we got this fair value gap, significant. The more that they hit this without taking it, makes me feel like they're building liquidity. And if we take this previous day's high, like we just did right here, now it's going to be very important to see what the reaction is going to be. If this purges this liquidity and immediately rapidly breaks down, that is clear, one of the clearest signs that we're going to continue to drop, because it's still bearish. We just have been reluctant to fulfill this area. I don't like that dollar is declining so aggressively, though. It makes it way less trustworthy. Again, it goes back to market symmetry. The first level of high probability, or layer of high probability, is market symmetry. Okay? And what is this, right? Some of you guys may be wondering. There's a lot of things going on. Let me take the stop right out. This is a wick quadrant, right? I believe, let me see, what is that one? So this is actually the daily, wait, is it the daily? That's the 4-hour wick. So these are the 4-hour wick quadrants. Again, we got the first presented fair value gap down there. Hasn't really presented anything other than the silver bullet inversion. The bearish breaker here, this is a good example of the bearish breaker, right? Turning to an inverted breaker. The down movement, the breaker candle, or the breaker block itself, right? The down movement prior to the up movement. That whole range, once it gets violated, the low of it should not be closed through again if it's going to continue order flow to the buy side. We now have SMT at the highs, by the way. That's significant. So yeah, pay close attention to this. We got SMT here. Again, I really don't like the dollar. It's playing games here. It's going lower. Very rapid, but we just took out previous day's low. Right when Euro took out previous day's high, Nasdaq took out previous day's high. So we still got that little piece of price delivery that could offer buy side because it's inefficient. There's no sell side or no buy side offered. So that's potentially going to be a sensitive area. So yeah, pay attention to this. Let's keep our eyes on it. I'll actually remove that from this. Can I do that? Yeah. So now we're back to the silver bullet. Now we're breaking through it. So let's see what the reaction is. We got low, high, stop run, SMT, lower low. Higher time frame is still bearish. Let's see what that results in here. We may get the overall change in this. We finally tagged that equal high. You see how much more reliable, or, you know, we'll see what happens because it's still sideways. But every time equal highs are formed, once you take it and then you get a displacement, then you get your PD array, then you get your model, and it's in line with the higher time frame, many times that is the more reliable idea to wait for. Okay. Because then, you know, things have already been done. It already took liquidity. So yeah, it's more reliable. We'll see what happens if it could take this low out too. If it can, it's going to be nice because then we have low, high, lower low. This down movement would then turn to a bearish breaker. But we'll see. We're still in this range, so low probability scenario in here. See what the reaction is here. If we leave that open, we're inverting this silver bullet fair value gap and that previous inverted fair value gap. We can actually kind of take that off and just use this. So let's see what happens here. It's looking pretty nice. You see the reaction though, compared to what happened earlier, how the responses were very lackluster before it took this high out. And then once it took this high out, you see the immediate feedback. We like that. And it's better to wait for this than to force something like this. No, now we'll see if it unfolds. Obviously, we're still stuck. Dollar is coming off the low, so that's a good sign. But we'll see. Hopefully this scenario makes sense, right? The filter process. Hopefully that makes sense. Again, we're in very, very choppy conditions right now, so very low probability. So expect things to be less clear, less dynamic, less follow through, if any at all. But once we break down through this low or this low here to that high is 50%, so basically breaking down below this low here, we could then use this as an inversion. And then we could try to see if we can get this to be a market maker sell model. From this low to that high, this could be the smart money reversal. The distribution phase may happen somewhere in here if this is going to deliver. And then we can see how price reacts down here in the second stage if we can get to that point. Okay, so let's see the reaction here. Should be very sensitive to this. If it gets back above it, there's just really no interest for me. That'll turn off my interest entirely. So yeah, we got the open price here for the 4-hour candle. Drop down, peaked above the open price here at 7 a.m. That also tagged the daily fair value gap, the piece of it. Give a quick response. Now we got back down below the silver bullet. We're in an overall downtrend. So we may be able to see a little bit of an expansion. And again, if not, if this can't hold this, I'm not going to be interested. So let's see what happens. It's going to have to give us that feedback really soon. We're going into a macro. It's very reluctant to get out of this nasty range we've been in since 7 a.m. Got this wick here. If it's going to be bearish, we need to respect this. And we have to also respect this wick here. It took the highs. It's reacted. This candle or the next candle should not take out this high. We have buy side, sell side. This upper portion should be balanced already on top of the fact there's SMT. And then, of course, we got the breakdown here below the silver bullet. So all of this up to this point, right, should be balanced. We should get follow through. At least to get these lows. And honestly, that would be enough. From that assumption, right? That's what, 42 points? Stop run. This is a 2022 model. Stop run. Shift. Fair value gap coupled with the silver bullet. Fair value gap 2 reclaimed. See if it can't break through this, because that'll be another inversion level. And then if it breaks down, comes back into that, we have the low, high, lower low should end up acting like a breaker, acting like a BPR. It shouldn't return to the 50% here. Basically, this would be our invalidation level right above that silver bullet. So yeah, now we're getting that. And that's enough for me. So yeah, now, if it breaks the 50% of this, we may get even more follow through. to then justify that market maker sell model, that tag of the higher time frame PD array, SMT response, YouTube 2022 model to short, within the silver bullet window using the silver bullet fair value gap reclaimed, and then just targeting the equilibrium. I'm not sure if we're going to get followed through because it's NFP week. No, we'll see. Would be nice to get that follow through, but it's already offered enough for us to take something down, go home with something. We should get immediate feedback from this level. It's a first presented fair value gap. If it's like exceedingly bearish and it's going to give us a move, it should react very sensitively here. Equilibrium is right here. And this 4-hour candle, once it breaks down below that, that's a change in state after the retracement. That'll put us in position to know that, yes, it's time. Outside of this reaction, it'll let us know that it's definitely time to continue. Should be trustworthy. See, we're in the macro. It should open up here. See, we got the 50% here of that wick too, right here. See what happened? Took the previous day's high, immediate feedback. Yeah, it seems like it might be short-lived. We'll see what happens. Nothing's upset the idea yet. It's just a simple natural retracement. Nothing to be concerned about. Remember, this low to that high should be treated as a BPR. We should not come back to this. If I was still in this trade, I'd be running my stop down to like right here, running down equity. But I like to, when I catch this type of move above 30 points on an NFP week, I am not really interested in getting too much more. Maybe it's going to be a day that I should have held. Doesn't really matter. As long as I can walk away with 20 to 30 or more per day, that sustains my lifestyle. So you got to figure out what that is for you. But I honestly think that 20 to 30 points is fine. That's not an encouragement for you guys to trade live, to copy me, or do anything that I tell you. It's meant for you to be educated and then start to understand how price operates. Clarity. Once you get clarity, you'll do whatever you will with the information. It's not my encouragement to get you to trade full time. I'm not a financial advisor, same financial advice. But I am able to tell you that I guarantee clarity. I guarantee you that spending time here will get you clarity, and then you can figure out the rest of the way. So let's see if we can get that follow through. We're already beyond the 50%, so we should start to really open up. Now that we're below that, if it could stay below that 50%, it makes it even more likely that we are going to get this beautiful, beautiful continued sell-off. Yeah, beautiful. And we strike again, yo. Strike again. Let me see. See what happened. Jen smashed first TP. First. There you go. There you go. Good job, Jen. And to answer your question, I'm assuming that you're asking me if I took the trade. I trade prop. I trade personal, though, more so in my AMP Live account. I like my personal account more. Took me years to build it to where it's at. But, you know, look at that beautiful run. Isn't it a thing of beauty? Isn't it beautiful to know what the hell you're looking at? It's amazing. DJ and Jen, you guys are in my private group. Is this a normal occurrence? Or is this just like I got lucky today? Is this a normal thing? Are we on side most of the time? Every single day. See that? Every day. DJ started with me on YouTube. Was gracious enough to give me his trust, and couldn't be more grateful. Jen too just started with me. Who else? Who else is with us? Rodri was here earlier. I'm not sure if he's still here. George is still here. It's all right if I didn't say good morning to you guys, by the way. Just seeing you guys say good morning. Yeah, Jen. Jen knows. Jen, you just started too. You're able to determine that within what? Within a week? I don't even think the free trial's up yet. Like, dude. But yeah, it's every day. It's every day, constantly spending time with y'all. And as far as did I book the trade, I'm assuming that you're asking if I engaged. I absolutely did engage. I always engage. Always engage. It's not a question. Oh, whoops. And on a live account. 81 points. You know, that was enough, but I did definitely push it a little further. You know. Sometimes you got to hold it, run down equity. Again, nothing upset this move here. I said, remember what I told you guys the whole way lower. First of all, I said this market maker sell model would unfold once the 50% is taken, but even if it takes this out, depending on how it treats this fair value gap. What did I tell you guys about this fair value gap? What did I tell you guys about that? I told you guys that it breaks through it. This should act as a balanced price range. I don't expect it to come up here. Once it left this and got below this, stop was immediately rushed to the silver bullet window. And then once it broke this, I told you guys, this should be sensitive. We should not close back above it. It could wick through it, that's fine. But look at the closure of the bodies with this first presented fair value gap from yesterday. It's a thing of beauty. It's absolutely gorgeous. Again, aside from like the entry and, how nice that was, I hope that the things that I talk about and have been talking about today for you guys that, are with me on YouTube or, anyone that watches the replay, hopefully everything that we've talked about makes sense. Why did I think, or why was I hesitant to take a buy? Because it's justified, right? the justifiable hesitancy and lack of interest to take a buy while continuing to support the sell side narrative, like the mindset and trust behind that process and how I get to the decisions that I make, you know, on days like this, I hope that it made sense, because this is a very important week for education. Because this week, NFP, FOMC, CPI, rate announcement days or weeks, they're some of the hardest times to trade. And most of the time, traders end up in the graveyard, the trader graveyard, when it comes to days like this or weeks like this. They don't know what to expect. They don't have the mental fortitude to hold on to a bearish narrative in the face of something going against them like this. Remember, all of this, because of the higher time frame focus that we have, the importance that we place on the higher time frame, allows us to, again, not worry about this. Do you notice earlier, remember I was telling you guys, we have nothing to worry about. We're not missing anything, and price was running like this. I was literally in the moment telling you guys, there's nothing to worry about. We have nothing to really worry about before the market opened. And then even towards the open, going through that first 30 minutes, right? We did talk about this could have been an opportunity to simply do what? To race for this PD array that I was waiting for, that I expected, if it got hit, to do exactly what it did, right? And the reluctance for it to dig into that, right? And then all of a sudden it reached into it, right? That was all worth waiting for, because the biggest moves, the highest velocity type of moves, the most reliable moves that you can almost guarantee as much as you can, that you will be part of a big move that gives you more than 20 to 30 points, even though that's the baseline. Those are resting when a higher time frame level or a higher time frame PD array is met. And you understand what the narrative is. We've been calling for lower prices, right? In the face of this, I bet you a lot of people saw this and they thought, oh, the low's in. I bet you some of these live streamers were thinking or saying to their communities, oh, yeah, it's going to go higher. It can't go lower much. It can't go lower any further. Well, reality is it absolutely can. And until our validation principles are violated, we're going to continue to stick to it. And anything going against this bearish trend because of our validation principles and our rooted mindset in the higher time frame, because of those things, any run higher, especially on a Monday or Tuesday, right? Sunday, Monday, Tuesday, at the beginning of the week, it's going to be expected to just price in a premium, a short-term premium, until it hits a logical higher time frame level that could reasonably be expected to give us a sell-off, right? Or a continued reaction in the direction of our higher time frame narrative, which again, I give you guys the bias and narrative on Sundays, right? Every Sunday. You know, that's outside of my private group, you know, but I think that those Sunday calls help you understand how I determine the narrative, not only for the next day or two, not only for the next week, for the next quarter, right? From January, I called for potential lower prices. I framed out exactly why every Sunday, you know, and what happened? Price went down to our exact level, right? What level was that? It's this quarterly fair value gap. How did we know that this was going to continue to drop? When did we know that it was about to be time to really amplify that it's going to go short? Well, we used this wick and how price was behaving on those lower time frames, you know, inside this quarter, right? How it was treating the quadrants in there, just like we do with these lower time frames, because everything's fractal. Right? That same logic that was used for us to trust that this was going to keep going lower, external range was taken, and then it seeked internal range liquidity. This whole run higher was to seek internal range liquidity after it took external here, right? Which again, we had that targeted as well. And then once it fulfilled that internal range liquidity, price ended up declining. And this logic with the wick is the same logic that's used with this wick, right? How it's respecting it. Look at the bodies of the candles. 50% of the wick, beautifully respected, that down wick. It's a balanced price range once it gets traded through. This wick, right? This up movement here. Let me get away from that. The up movement here, that wick, right? Trading into that silver bullet, right? When we got down below and created that wick, the next two candles, we should be able to see feedback that it's respecting the midpoint. With the fact that price broke down from a higher time frame PD array that had SMT in the bearish narrative, with all that stuff taking place, it reinforces the likelihood of this continuing to hold. And then the macro came in. You didn't have to take this if it didn't fit your rules, right? But once the macro hit, what happened? It got down below this level that I told you guys about. I told you about this low to that high being a balanced price range, how I'm not expecting this to be targeted, how this was a market maker sell model off the heels of this response where the smart money reversal was at inside that higher time frame, right? That higher time frame PD array up here after the daily high was swept. You know, mind you, a lot of the stuff that I'm saying right now, for someone that's brand new, that doesn't know really anything, or has been around someone that doesn't truly have a depth of knowledge that's worth listening to, this stuff may seem like, oh, there's a lot of things going on. In any profession, to be a master, there's a lot of things you got to do, right? There's many things you have to learn to become a master. And then to simplify topics, it requires an even higher level of mastery. But just know, you know, it may seem like a lot, but think about the decision making that I made and how fast I made the decisions, right? I came to a determination that this was probably going to short once it started unfolding, right? Once it proved this here, this displacement, we were waiting. It's also the YouTube 2022 model, you know? But I came to this determination because of my higher time frame clarity. Hopefully I got you guys to understand the higher time frame. Hopefully you guys were able to trust it. I even talked about what would have caused this to go higher in the counter trend objective. It was that 8-hour bullish order block. It was the breaker here, high, low, high, right? Came down, it respected the midpoint of that up candle. We got displacement, change in state, return back into it. That was enough for a move to be seen there. This high to that low, right? Given that, you know, we got a high, low, didn't quite take this out. But once it broke this high, that became, I mean, it did take a little bit of the sell side, but this right here became an order block. This is a smaller time frame order block inside the larger one, right? There's a dovetail effect that takes place. And then you see the rapid response inside of what time? Look at the time this stuff's happening inside of a macro. Remember earlier I mentioned that it's funny how people who have big names, who are respectable, who I used to look up to, are trying to say absurd things like macros don't exist. Really? Right? Really? Every single day we see that they exist. Why steer people the wrong way? It just makes the complexities even more complex, because then you're looking at other things when you don't have to be. Because the stuff that's taught exactly the way it's taught is enough. You don't got to rename things. I don't have to rename things to, you know, to stand out. You know, things like this stand out for me. I don't have to do crazy antics. Okay, Aberio? Here, let me show you real quick. So if we take this here, I think you could see the time, right? You go to this little arrow, chart interval, if you have the premium as well. And then you can come over here. Some of them are by default. I think the 8 hours by default. If it doesn't have it, you just scroll, wait, it's all the way down? Oh no, you go to here, the add custom interval at the very top. And then you just type in, you know, hours, days, weeks, months, whatever, to any time interval. You could do a 17-minute chart. You could do a 17-hour chart. You could do a 17-day chart, right? You could do any anything from this for those that don't know. But that's how you do it. That's how you get some of these unorthodox time frames. Okay. But yeah, going back to what I said a second ago, right? This may seem very complex to the uninitiated, someone that doesn't have almost a decade of experience like I do. I mean, it's been a lot. I remember when this stuff didn't make any sense to me at all. I felt hopeless. I know there was times that I didn't know if I could do this. I didn't know if I could trust it. But that's where guidance, having the proper guidance is so important, and putting in reps on things that really work with someone that truly can show that it really works and can walk you through it. And that's, when I started offering my time as a mentor, both here on YouTube for free for those that maybe don't have the opportunity to join my private group. My students helped me set what was reasonable in terms of the barrier for entry. It's the cheapest in the industry in comparison to what you get. We do this every single day. I don't think there's many mentors that do this every single day. But time is valuable. And obviously a mentor that has spent almost over a decade doing this, lots of blood, sweat, and tears, time, energy, effort, emotional damage, then recovery. The whole ups and downs. For someone that arrives, you can imagine that they value their time. And there's just a certain amount of time that's allocated to, free, right? Because a lot of people just don't appreciate it. ICT has his mindset with how he does things. But then again, if he was so against people teaching something who have something worth listening to, then why did he do it? Right? If he felt that, there was no reason, which I'm sure he saw the same thing I do. Sometimes people, they're not valuing the free overall content. Like you can imagine, I do this every single week here on YouTube. There's like a lot of people that come and go to my channel. Majority of them don't stick around. Because why, right? What could be the reason? Maybe they don't, maybe they want me to be jumping up and down, doing a bunch of stuff, right? Entertaining them versus teaching them. Or they just don't have the patience to actually learn and they just want signals. I don't want to cater to those people. I've spent literally almost a decade doing this. So if I'm going to sit there and work one-on-one, at least on the one-on-one basis, right? Or everyday live calls, right? I want people that are serious, right? And I'm not trying to have to kick and remove do all this stuff and manage things that way. I'm just not trying to do that. Otherwise, I would just not even come out and do it publicly, and to teach people publicly. I did that for a year. It was absolutely ridiculous. I felt like it wasn't appreciated. It's not that I need validation or anything, but if I'm going to pour in hours a day, like with my one-on-one students, I spend 3 hours every single call pretty much. It's rarely shorter unless they need to cut it shorter or I have something to do. But if I'm going to spend that much time and pour into people, there's going to be a barrier to entry. Otherwise, I pour so much out on YouTube as well, right? There's so much stuff that I talk about because I know that, some people do value it. Like those of you still on the call right now who are with me every single week. I know there's people that do value it, but again, it has to be the way that it is. And some people don't like it. That's fine. There's a whole lot of people that you can learn from. But I can go out on a limb and say most of them are not doing what we're doing. Not just me, like the students that are in my group do more than a lot of the people that I know that have been trying to trade full time for the same amount of time as I have, which is going to be 7 years this year, which is insane to think about, so, just know that, going back to what I was saying earlier, there is complexities to this. I do my best to simplify it. Those of you that are serious, that do pour time into these calls, that spend time with me, that really focus, that really ask questions, I'm always open. My DMs, right? My DMs are always open. I'm always willing to answer questions. So those of you that are serious that hang out, you guys see the value. You see that it's here. All you got to do is just stick around, hang around, be patient, listen to what's being taught, and you will see progress. And if you're one of those students that needs that extra help, right, that wants to be part of my private group, that wants to do this exactly the thing that I'm doing here every single day and see how consistent this stuff is, uh, like uh, uh, like what DJ said earlier, right? DJ started with me on YouTube. He joined me in my private group because he saw what I was doing on YouTube and saw that now it's every single day. That's not an overstatement. That doesn't mean I win every day. Doesn't mean I'm correct every single time. But when we're wrong, we end the day being correct, right? But most of the time, those are adjustments, and we have we have the ability and a framework for being flexible. So even if we are wrong to start the day, or don't know, or maybe are unsure, we end the day at least by 7 a.m. The silver bullet, knowing what should go on, and then we carry that information maybe into the PM session for those of you that trade that, and you have a pretty reasonable understanding of what to expect on that time as well. So yeah, for those that need extra help, that's offered. Again, many find that the YouTube channel is enough, but if you want something like this every single day, there is a route to do that. I do have one-on-one availability every quarter. I haven't announced that this quarter because I'm still working with the 21 students that I have been working with for the last quarter. They're not where I want them to be yet before I cut them loose. But mentorship with me doesn't end until I'm satisfied with where you're at. Okay. Or if students just decide that trading is just not for them, So yeah, just know that if things don't make sense at the moment, if it feels overwhelming, it was like that for all of us. There is light at the end of the tunnel. The stuff that we do here does work. I'm a very flexible mentor. I meet you where you're at. But obviously it is your responsibility as a student to let me understand, to help me understand where you're at. Ask questions, even if you're just here on YouTube and asking stuff in DMs. I'm not Houdini, right? I can't read minds. There's a lot of common issues that my students, me helping them has helped me learn how to solve a lot of problems, every single issue. And it always comes back to putting rules in, certain rules to mitigate certain issues. So just keep that in mind too whenever you have problems. And again, my DMs are always available. I appreciate all of you guys for the love and support. It's amazing to see you guys progress. I expect that this year we'll see a lot more success stories, and a lot more lives being changed, or at least getting the skill set to a point where you can see that you can, on your own, in fact, change what your future holds. And the only thing I can guarantee, obviously, is clarity. I try to do that when it comes to bias and narrative on Sundays for free. And then, of course, these calls, they just add to it because we use what we talk about on Sundays on these calls. But yeah, so with that being said, if you guys have any issues or questions, or want to bounce some ideas off of someone, I'm always here. We'll be live again here on YouTube on Sunday. Hopefully I feel better. Think about it. I just nailed this analysis when I am absolutely horribly sick right now. It's because I have rules and I'm not going off emotions. If this was me 5 years ago, being sick, I would have been like, well, I just need to make some money and I'll be able to do something. I'll be able to feel better. It's not like that no more. It took a long time for me to get to that point. It took me like 3 years to get to that point. And 2 mentors outside of ICT who are ICT purists for the last, since ICT was on baby pips. It was by luck that I found them. One introduced me to the other, and I ended up having both of them help me. They're not on YouTube. They're outside of social media other than Telegram. And, their barrier to entry is massive. It's really, really large, unfortunately, but I think given their skill set, it was worth every penny. I would have paid 10 grand each to get if I knew what I know now, or if I knew the outcome back then, I'd just went out on a whim and just like prayed, please let this be a good decision, because it's going to take a huge amount of my money. But I, saw what they did, got referred by a friend, and then, one mentor introduced me to the other. And I think that the investment was worth it. Again, I would have paid 10 times the amount that they made me pay, which is close to 12 grand, 6 each, and I'm bringing the same logic and knowledge that I've accumulated both from my own experience and my investments into my own education and time investment and all that. I'm bringing that here with the lowest barrier to entry, both free and then another level as well for those that need that extra handheld personalized assistance, and I do it every day, documented every day, right? So that's a benefit you guys get from being here as well. All the crazy investment that I've put into this. I made the decision early on that if it wasn't going to be this, then I'm going to be homeless. Then I'm just not going to do anything. And as irresponsible as that is, the fear of that continues to get me up to this very day at 3 a.m. to be on the chart, prepared, ready to go to battle and never quit. I can't be homeless. I can't be a failure. I have a child. I have a family. It's non-negotiable that I figure this out. I didn't care if it took me 10 years to figure it out. I was not going to fail. And I still carry that to this very day. So if you guys haven't got to that point, maybe you don't got to be so dramatic. That's just reckless on my part. But that's how much I believed in this because of ICT. Seeing what he was able to do and is able to do, seeing what some of my friends were able to do using his concepts, meeting the people that I've met, and then experiencing it on my own. There's no reason to doubt it. What you should question is how bad do you want it? How much are you sacrificing to make this work? Would you get up at 3 a.m. if it required it? Would you change a job? Maybe take a pay cut if needed, if it's reasonable, obviously, to be able to afford yourself the time to study, to do this? Are those sacrifices you're willing to make? For some of us, it's required to make a crazy sacrifice like that on a whim, right? Just like having faith that we will be able to do this because this stuff works and other people have done it. So why not you? Right? Why not you? If you guys haven't got to that point where this is how you think about this and have a burning passion, so much so that nothing will ever take this away, your passion for this will never die. Nothing can take it away. You really want to consider what it would take, to make that part of your psyche as a trader. Because the reality is this stuff is really difficult. It's very difficult, and most people fail. It's good to have people that know what they're doing. It gives you a much better chance. But no matter who you listen to, no matter who you learn from, ICT, me, or anybody else that proves what they're doing is effective, at the end of the day, you're going to have to push the button. You're going to have to do the back testing. You're going to have to build the trust with your model, the process, how you come to a determination of what to do, how you manage risk. All these things are personal. So you have to take it serious. It's very hard. You're going to struggle. If anyone tells you otherwise, they're idiots. There is ways to simplify it, which I do my best to put on display. But that doesn't take away from the fact that backtesting obsessively and making sacrifices is part of this. It doesn't take that away, unfortunately. And you have to do the right things, and you have to know who you're listening to. They have to be worth listening to. If they can't prove it to you, and at least at a minimum, come out and show you this type of stuff, why are you listening to them? If they just have pre-recorded videos and never talk about things before the fact, and you're just following them because, hey, everyone else is following them, you're going to be just like all those people. And most of these influencers are liars. You know, they're not telling the truth. Their lifestyle is not from solely trading. You know, it's mostly from other things. I don't have any other things that I do other than this. Before I mentored, before I decided to, you know, give my time and share what I know, I was already trading and a full-time trader. That's how it should be. If someone's offering a service of any kind, if they're not full-time just as a trader, or if they can't be full-time just as a trader with only that, of course no one's going to really say, right? They hide this crap. But you can tell when you're on the chart with them, seeing what they call out or the things they don't call out, you know, how they carry themselves. If it's too much about lifestyle, most of the time, you know, they're not really trading. You know, they may know how to read the chart, but you got to look out for these things, you know what I mean? That's why I'm not super flamboyant. That's why I don't show my profits all the time, you know, if ever, right? That's not the focus. The focus is, am I calling price correctly? And can you see yourself learning from what's being taught? Because that's what's going to help you get clarity. Once I can get you to clarity, the rest, it's up to you. And, you know, it's going to be all on you. Your success will be in your hands at that point. You know, and from what I've heard, I do a pretty decent job of getting most traders to that point, that clarity point. So let me see the chat real quick. No worries, George. No worries. You and DJ are some of the most consistent students. We talk every day, on live every day. DJ said still here. That's your A game on. Yeah, I know. Ugh, I know. Yeah, I guess I'll let you guys go. Definitely talked your head off. My throat's probably gonna hurt even more when I get off this. But yeah, hopefully this goes away soon because it's freaking annoying, really. But yeah, so again, if you guys have any questions, let me know. Appreciate you guys for spending time here. Give me your trust. You could be anywhere else, but you choose to be here. So just know that I really appreciate it. Whether you decide to, you know, be in my private group at some point or not, you guys still on YouTube are part of the family as well. So I'm here to help you. You know, and I want to see all of you succeed. You know, I don't hold back anything. You know, I try to keep it as simple as possible and applicable as possible. So every call, you have something that you can go and apply to your chart and look for it. And most of the stuff is universal, especially the order flow principles that I talk about. Like when price is delivering, how to look at certain things, you know, what should hold if it's going to continue to push price in your direction, fair value gaps, how they should be treated, things like this, right? It should be very fast feedback and it should respect it, balance price ranges. You know, all that stuff is universal. It doesn't matter what model you use. It could be a 2022 model. You know, it could be the, you know, different models I teach in my private group or anything that you may have learned, optimal trade entry, the silver bullet, like, you know, whatever the case may be. This was the silver bullet opportunity overlapping with the 2022 model. So that converges together too. You know, all four, I guess five. I have four main models. I have a couple extra satellite models, but all of them merge together or piggyback off one another. And that's why I use the certain ones that I use. I teach that as well to students in my private group, how that can be achieved. But, you know, no matter what model you use, a lot of the stuff that I teach here on YouTube is universal because, you know, I want it to be universal for everybody. So everyone can use it no matter what you use to execute a trade. Okay. So yeah, again, hopefully you guys got value. Again, you guys could be anywhere else, but you're here. So I greatly appreciate it. Just know that. If you guys have any questions, let me know. My DM's always open. And I will see you beautiful people back here on YouTube on Sunday. And those of you in my private group, we will be live tomorrow. Ooh. Well, I'm up at 3 a.m., so I'll probably send the link out I'll probably send the link out around 4:45, 5 a.m. Pacific Standard Time, just so we can see. I mean, we could really just let this go, right? If you can't wake up for that time or you can't be here, it's okay. As long as you're here by 6:30, that'll be fine, because that'll be an hour basically after the non-farm payroll comes out. And then we also have something happening at 7. So with this split news like this, especially on an NFP announcement, a lot of times the first move, the first data that comes out can be fake, right? It may give you a really nasty fake out move that first, like what, 2 hours from 5 a.m. to 7 a.m. or to 6:55, 6:50, the macro. And then, of course, the 7 a.m. may come. We may not get anything that takes place in this. It may be a very lackluster response. But because there's a news that's right after it, and it's a split news event, not just NFP on its own, NFP is a 2-stage news event. You know, this isn't the real NFP, right? The real one comes out here. So this is where the big dynamics are going to take place. So this, you know, it still will have volatility. PMI is very aggressive too. But the split news event, you know, it's not only during NFP either when you have a split news event like this, you know, that it'll potentially wait for the last one to come out before it does the real move. But that's going to be the expectation, right? We're going to see potentially a fake move, if any at all, leading up to the 7 a.m. And then 7 a.m. may give us a punch around, right? We may chop around for the first 2 hours. But we'll see. It's a very good study. So those of you that can be up, you know, definitely get on if you can. Those of you in my private group, again, I'll send the link out at 4:45, 5 a.m. potentially. And then, you know, it'll be recorded as well. So I'll put it in the archive. But yeah, we'll see closer to the 7 a.m. if we can find something to participate in. I'm not going to participate in this, but we will be up to try to determine what it's going to do. And then, of course, Thursday, you know, we'll be live at 5 a.m. And then Friday will be the same thing. And we'll see what kind of happens. Okay. So, yeah, with that being said, God bless you guys. Again, thank you for your support. Hopefully you guys got value from today. Let me know if you guys have any questions. If you guys haven't liked the video, subscribe to the channel if you haven't already. If you have anyone that you think can benefit from what we do here, definitely let them know. I'm always looking to have more people join, because that means more lives that I get to help push towards consistency or just clarity in the market. So, yeah. With that being said, God bless you guys. If you guys have any like main things that you learned from today, I encourage you to place them in the comments, like whatever those topics are. It'll kind of show me what was the most powerful from the call. If you have any critiques too, like what I could do better as well, I'm always open to that type of criticism too. I'm trying to serve you guys as best as I can, and everything that we do in terms of the presentation, right? Aside from my system, you know, a lot of it has come from you guys and your recommendations. Same with like how the private group is structured. Same with the free group. It's all from recommendations, you know, because again, I'm not here for me. I'm here for you. Okay. And yeah, so if you guys have any recommendations, that'd be great. Right. But yeah, that being said, God bless you guys. I'll see you beautiful people on Sunday. And those of you in my private group, I'll see you bright and early tomorrow morning. Okay. So have a good rest of your day, you guys.